I want to talk to you about the top 10 mutual funds of all time. Buy any of this, go to sleep, and when you wake up, you will earn at least 10% ROI annually. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to have a convo with you about the top 10 mutual funds of all time. If you are a lazy investor just like me and you just want to chill and relax and not track the market every single day or every single minute or every single hour, you want to consider any of those top mutual funds because they have been outperforming the market for the last 20 to 25 years. There are, when you really think about it, there are plenty of opportunities for bragging rights in the mutual fund world, but these are the absolute best mutual funds based on performance since inception. If you are seeking out the best mutual funds, you want to keep your wits about you, because mutual funds have a mind-numbing selection of ways to claim bragging rights, right? It's all marketing. You hear things like best 5-year record, best three-year record for value funds, best 10-year record for growth funds with at least $1 billion or $10 billion in asset. The bottom line here is that Morningstar counts 110 mutual fund categories. So even if you spread the awards among the 8,000 or so garden variety open-ended mutual funds, there will be plenty of opportunities for bragging rights. And thanks to the longest running bull market in history, everyone's 10-year record looks great, right? But it's another thing to outperform the competition over the entirety of a fund's life. This is something you have to think about. Here are the 10 best mutual funds of all time. So we actually looked at the records of all U.S. listed stock funds holding U.S. and or international stocks alike, with at least a 20-year track record, and we rank them based on returns since their inception. So actually, for us in our analysis, going for a minimum of 2 decades eliminates, if you think about it, some of the bias from a decade-long bull market and adds in at least 2 major bear markets. And you'll note that in our selection that there are no index funds nor any international funds, and we did not exclude them intentionally. They just were not in the top 10 equity funds, because index funds don't aim to be top performers and international funds are in a long-term performance drought at a moment. One thing I want to say here is that we did intentionally exclude bond and money market funds, however, because that's not where you go for high performance, right? And another thing you need to pay attention to is that the data we're showing you in this show was valid as of April 30th, 2021. And we ranked these funds based on goals and risk tolerance, style and fund type, fees and loads, passive versus active management, evaluation of managers and past results, and the size of the fund. Number 10, folks, we have Nuveen Small Cap Growth Opportunities 1. Our score 8 over 10, and this is the Morningstar category for this fund is US Small Growth. Minimum to invest $1,000. Inception date August 1st, 1995. The average annual return since inception 13.49%. Gross expense ratio 1.18%, and net expense ratio 0.98%. And this is a pretty well diversified fund. We're showing you right now on the screen. You have the industry allocation. So you have a biotechnology that's at nearly 10%, all the way to pharmaceuticals at 2%. And this is pretty well diversified portfolio. And you can also see again the level of diversification in terms of the sector allocation. You can see here it goes from healthcare around 28% all the way to communication services 2.2%. What I want to say in general is that the Nuveen Small Cap Growth Opportunities 1 is one of the best mutual funds out there. Now, it's best only if you have a long-term vision, because in the short run, they could be a painful one. They could be a stressful holding. Why? Because the fund is spectacular in bull markets, but painful in bears. And for example, the fund more than tripled between the start of 1998 and March 2000, then gave up a considerable chunk of those gains during the 2000-2002 bear market. All right. So while the fund has performed well during the current bull market, it's still lagging the Russell 2000 Growth Index over the past 10 years. So something you need to know. Number 9, folks, we have here Kinetics Internet No Load. Our score 8.5 over 10. The Morningstar category for this fund is U.S. large growth. Minimum to invest 2,500. The fund started October 21st, 1996. And since inception, it has yielded 13.67%. The gross expense ratio 2.09%. Net expense ratio the same thing. In our view, this is a little pricey, but listen, it's worth it. And we're showing you right now on the screen that this fund has excellent performance since its inception. Imagine if you had actually invested 10 grand when the fund was created, you would have been making, as of April 2000, as of December 2020, December 31st, 2020, you would be making nearly 300,000. That's fantastic. And we love the fact that this fund is remarkably diversified. So you have I'm showing you right now on the screen again. You can see on the screen the different sectors, the different industries in which the fund is currently. And we love the fact also that they do have holdings in technology, finance, and real estate, and its largest holding is in a Grayscale Bitcoin Trust, and its second largest holding is in the Texas Pacific Land Trust. So you kind of have a well diversified fund. Number 8, folks, we have here Columbia Acorn International. Our score 8.5 over 10. The Morningstar category is a U.S. mid-cap growth. Minimum to invest 2,500. This is one of the oldest funds on our list. It was created June 10, 1970, and the average annual return since inception 14.12%. Think about it. This company for the last 50 years has returned every year to investors 14.12%. That's wonderful. That's wonderful, folks. And that's what I call a track record. So the gross expense ratio is 1.18%. The net expense ratio is 0.98%. And so despite the Morningstar's mid-cap growth designation, Columbia Acorn Institutional has long taken a value-oriented approach to picking stocks. So at the moment, the fund is overweight healthcare stocks relative to its index. And one thing I also want to say here is that while Columbia Acorn's records puts it just outside the 10 best, inside the 10 best mutual funds of all time, you have to understand that the fund constantly goes through some number of management changes in the past few years. So a measure of caution is warranted here. Number 7, folks, we have the Allianz GI Technology Institutional, and our score 9 over 10. The Morningstar category for this fund, U.S. Technology. Minimum to invest $2,000. The fund was created December 27, 1995, and the average annual return since inception, 14.21%. Gross expense ratio, 1.14%, the same as the net expense ratio. What we love here is that here is a fund that's really focused on technology. You can see on the screen we have a snapshot of the holdings, the top holdings of the fund. So you have the alphabet of the world. So Google, parent company, Facebook, Micron, Twilio, Apple, Samsung, and so on and so forth. Okay. One thing I want to say here is that in technology, 25 years is an eternity. But managers Hua Chen and Walter Price Jr. have run Allianz GI Technology Institutional for nearly that long. And they are fond of mid-cap stocks, which have slowed the fund's performance in these days of giants such as Netflix and Alphabet. But the cool thing here is that this is a fund that actually is still growing. Number 6, folks, we have here T. Rowe Price Communications and Technology Investor. Our score 9 over 10. And the Morningstar category is U.S. Communications. Minimum to invest $2,500. The inception date, October 13, 1993. And the average annual return since inception, 14.55%. and the gross expense ratio 0.76%. Same thing for the net expense ratio. We love this fund because it's kind of cheap in terms of the gross the loads, and what they do very well is that they merge the technology, communications, and consumer discretionary sectors. Fantastic. It has about 30% of its asset in tech, 30% in consumer cyclical stocks, and 18% in communications. You can see on the screen here, we're showing you right now the sector allocation of this fund very well. And this was as of February 28, 2021. And the top holdings of the fund include Amazon.com, T-Mobile US, and Chinese internet giant Tencent Holdings. In the past 5 years, the fund has gained an average of 15% a year, whooping the typical category funds 8.29% annual gain. That's great. Number 5, folks, we have BlackRock Health Sciences Opportunities Investor A. Our score 9/10. And the Morningstar category of this fund is US Health. Minimum to invest $2,000. The fund was started on December 21st, 1999. The average annual return since inception, 14.66%. The gross expense ratio, 1.11%. Same for net expense ratio. One thing I want to see here is that this fund is great because manager Aaron Shih has been steering the fund for the last 16 years. And what a fantastic job. What a great job. And the fund focuses on large cap growth stocks in the healthcare industry, and is currently, even though this is the primary focus of the fund, currently the fund is stuffed with massive names such as United Health Group, Abbott Labs, and Merck's. And we all know we are in the COVID-19 situation, so big pharma is actually poised to go big. All right, and the fund's cautious approach has made it one of the best mutual funds of its kind, and the fund has easily beaten its peers over the past 3, 5, 10, and 15 years. Now, one thing I want to say here is that it's not cheap though, because you have an expense ratio of 1.11% and a maximum 5.25% sales charge. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We're still having a conversation here about the top 10 mutual funds of all time. You buy any one of these, go to sleep, and when you wake up, you will earn at least 10% ROI year over year. I want to talk to you about number 4. We have Fidelity Magellan. Our score 9.5/10. Morningstar category US large growth. Minimum to invest $0, so there's no minimum to invest. The inception date of this fund, check this out, May 2nd, 1963. Whew. The average annual return since inception, 15.84%. The gross expense ratio, 0.77%. And the net expense ratio, 0.77%. Now, celebrated Go Anywhere Fidelity Magellan is among the best known mutual funds on the market. And that's thanks in part to its spectacular beginning, which saw Edward Ned Johnson III gain an average of 30% annually from 1963 through the end of 1971. Think about that. Over a stretch of 8 years, this man has actually achieved 30% minimum annually. And Peter Lynch, who ran the fund from 1977 through 1990, produced a sizzling 29.2% over his 13 years. However, for the past 15 years, Magellan has lagged large company growth funds by 1.69% annually on average. The fund's current manager, Jeffrey Feingold, will step down next year, sitting the helm to Sami Simnagar, his current co-manager. We see great things coming along for this fund, so a great fund to consider. Number 3, folks, we have Vanguard Healthcare Investor. Our score 9.5/10. Morningstar category US Health. Minimum to invest $3,000. The inception date here, May 23rd, 1984. The average annual return since inception, 15.99%. And the gross expense ratio, 0.32%. which is the same thing as the net expense ratio. We love this fund because it's cheap. You have an expense ratio of 0.32%, and it's really the Cadillac of healthcare funds. Even though they have tapped the brakes in the past few years, this fund remains a top contender in our list of the best mutual funds of all time. And the manager, Gene Hines, has been driving it for 11 years and averaged an 11.53% annual gain through April 30th, compared to 4.9% for her benchmark index. Think about that. I mean, Gene is fantastic. She does a great job. And yeah, furthermore, one thing I want to say also is that Vanguard Healthcare charges a lean 0.32% a year in expenses for its investor shares, right? So that's wonderful. Number 2, folks, we have here Wasatch Microcap. And our score, 9.5/10. And the Morningstar category here is U.S. Small Growth. Minimum to invest $2,000. The inception date of this fund is June 19, 1995. The average annual return since inception, 16.42%. Gross expense ratio, same as net expense ratio, 1.66%. And we actually love this fund too, because micro-cap stocks, typically thought of as companies between 50 million and 300 million in market value, are poorly followed by Wall Street analysts, which should give savvy investors an edge, right? And this fund seems to prove that. They have beaten all those in their class by 3.45 percentage points a year over the past decades. The past 10 years. It is a pricey fund, I agree, because you have 1.66 expense ratio, but it has actually justified the cost with a performance that puts it near the tippy top of America's best mutual funds. And Wasatch Microcap, they do have about $500 million in asset, and this is kind of small enough for it to stay open to investors for a little longer, really. So you can actually through this investment, you can capitalize on a very efficient, alpha-rich segment of the market. And we love the fact that they also blend growth, high growth, core growth, and fallen angel microcap stocks. Number 1, folks, when it comes to the best mutual fund of all time, our choice is Fidelity Select Software and IT Services. Our score, 10/10. Morningstar category, U.S. Technology. Minimum to invest $0. The inception date for this fund is July 29, 1985. The return since inception, the average annual return since inception, 17.25%. That's wonderful. That's whopping. Gross expense ratio, 0.71%, the same as the net expense ratio. And here is a fund that I call a legend, because the fund has not only survived the crash of 1987, the tech wreck of 2000-2002, and the Great Recession of 2008, but it has emerged as the top performing fund since inception. And the manager, Ali Khan, has been at the helm for a little more than 5 years, scoring a 20% average annual gain through March 30th. That beats the typical category fund by nearly 6% a year. And the fund has a whopping 25% of its asset invested in Microsoft. Its second largest stake is a 7.14% in Visa. So I'm showing you on the screen right now the top 10 holdings. You have Microsoft, Visa, Adobe, MasterCard, PayPal, CRM, Autodesk, Google, Cognizant Tech Solutions, and Oracle. And in terms of regional diversification, United States accounts for approximately 95%, Europe about 1.5%, emerging markets 1%, Canada about 0.5%, and the rest. All right, folks, this was a quick rundown of the top 10 mutual funds of all time. I hope that this video has added a lot of value to your life and will help you actually increase your investment strategies. And I want to quickly recap here. So we have number 1, Fidelity Select Software and IT Services, 10/10. Number 2, we have Wasatch Microcap. Our score is 9.5/10. Number 3, we have Vanguard Healthcare Investor. Our score is 9.5/10. Number 4, we have Fidelity Magellan. 9.5 over 10. Number 5, we have BlackRock Health Sciences Opportunities Investor A, 9 over 10. Number 6, we have T. Rowe Price Communications and Technology Investor, 9 over 10. Number 7, we have Allianz GI Technology Institutional, 9 over 10. Number 8, we have Columbia Acorn Internet Institutional, 8.5 over 10. Number 9 rather, we have Kinetics Internet No Load, 8.5 over 10. And number 10, last but not the least, we have Nuveen Small Cap Growth Opportunities 1. Our score, 8 over 10. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.